Hello, and welcome to GBBC's virtual Davos. Our panel, which I'm very excited for a great group of discussants, is on blockchain and the future of commodity trading. Joining me are Jeanine Hightower-Sellitto, CEO of Atomyze, Andrew Pisano, head of XRegistries at Xpansiv, Amanda Martinez, President and CEO of Artemis Technology Group, and Omer Ibraham, Director of Business Development at LiquidX. We'll do some quick introductions. I myself am a former senior official at the U.S. Commodity Futures Trading Commission, so that's, I think, why they asked me to moderate the panel on commodities. There, I was responsible for the design and launch of Lab CFTC, and also I've led the CFTC's initial work on blockchain and virtual currencies. I'm a co-founder and board member of Global Digital Finance and also help advise ESMA on their working group on financial innovation. And then I'll go through the panelists and ask them to introduce themselves, and we'll just jump right in. So starting with Jeanine.
Hi, good morning, good afternoon to everybody. I'm Jeanine Hightower-Sellitto. I'm the CEO of Atomyze LLC. Atomyze is building an advanced marketplace to source, trade, invest, and own physical commodities. We're doing this by way of blockchain technology, and our goal is to modernize trading and investing in metals and other commodities and reimagining the global supply chain for the same materials. I've had 25 years in financial markets in terms of my experience, both traditional and crypto. I joined Atomyze in July of 2020. Prior to that, I was the managing director of operations at Gemini, where I ran the exchange business and built out the commercial side of the custody business. Prior to Gemini, I spent almost 14 years at an SEC-regulated options exchange, which was a fintech in the early days that brought electronic trading to the US listed options markets. Back in the days when it was still paper-based and phone-based, floor-based. And prior to that, in the late 90s, I spent a couple of years doing investment banking for internet companies in the dot-com boom.
Great, Andrew.
Thanks, Jeff. Thanks, GBBC and everybody watching live. My name is Andrew Pisano. I run the registries business at Xpansiv. If you don't know Xpansiv, we are the global marketplace for ESG inclusive commodities. We operate the largest spot exchange for the trading of carbon offsets, RECs, and water rights and entitlements. We also operate the infrastructure for a new burgeoning asset class that we call digital commodities, which we'll probably get into. Prior to Xpansiv, I was lead business development at Digital Asset as well as CME Group. So looking forward to the panel. Thank you.
Great to have you, Amanda.
Hey everyone, I'm Amanda Martinez. I'm with Artemis Climate Partners. We have a platform that tracks and traces attributes related to activities within the supply chain and utilize the tracking and tracing for ESG reporting. Obviously, the most important of which, or one of the most important of which, is the various commodities. I actually come from the background of utility scale power generation. I'm very deeply involved in the forefront of renewables since 2004, and with transmission and distribution upgrades subsequent to that.
Great, Amanda and Omer.
Hey everybody, and thank you for having me here on the panel. I'm from LiquidX. I'm part of the business development team here. For those who don't know LiquidX, we are a fintech primarily focused on digitizing the working capital space and trade finance. We do this by using distributed ledger technology to be able to kind of digitize the actual supply chain itself from a corporate perspective and create a transferable network where information can actually pass through financial institutions and kind of rebuild trust in the actual supply chain itself. Prior to joining LiquidX, I was actually in commodity trading. I was the treasurer of Tricon Energy, it's a global petrochemical trader. And I was primarily in charge of the company's working capital structure, structuring borrowing bases, credit facilities, doing pre-export financing. And prior to that, even I was in the banking world as a credit underwriter. But most of my time being spent primarily in commodities and on the financial side.
Great. So looking forward to a very lively discussion. And, before the discussion with the panelists, I thought it might be helpful just to spend a moment on, well, what is the definition of a commodity and what is meant? And that actually is defined, typically by statute, and it may be different jurisdiction by jurisdiction. So under the US CFTC definition, commodity is defined under the Commodity Exchange Act. It includes agricultural commodities enumerated in the Act, other goods and articles. There's a very broad phrase, which is somewhat future-looking, that says it's all services, rights, and interests in which contracts for future delivery are presently or in the future dealt with. There's exclusions in the US for onions and movie tickets. A commodity can be, each of which has its own historical chapter that's not relevant here. So it can be a physical commodity, such as an agricultural product, a natural resource, can also be a financial instrument, such as a currency or an interest rate. It does not, in the US definition, have to be physical. It can be intangible, such as Bitcoin or the occurrence or non-occurrence of an event. Historically, the EU definition actually excluded most intangible things other than carbon credits, though that's evolving. The way we sometimes explain it is that a commodity is pretty much anything that can be, anything that is a noun is probably something that can be a commodity. So, we're looking at a pretty broad range of things, but often people don't know the term. So let's look at what are some of the frictions and challenges with commodity trading at present. And Jeanine, let's kick off with you.
Yeah, thanks, Jeff. And I think the frictions and the challenges really depend on the asset class. And as you mentioned, there's a pretty wide variety of commodities that are interested for commercial users, for investors in the US and elsewhere across the globe. And while the definition is pretty broad, there are frictions and challenges. Again, depends really on the type of commodities. But for my space, in terms of Atomyze, we're focused on real world assets. So assets that exist physically in the real world in terms of commodities. And for those assets, there are some significant challenges to investing in them, and even on the supply chain side to managing them. Compared to other asset classes, the processes and the technologies to access them and trade them are pretty antiquated. There's a lot of logistical burdens that make it unrealistic and impractical for some investors to access these markets. And it creates a real burden on the operations and the back office of some of these companies. Even if you get beyond that, there's some inherent risks in trading these products in terms of credit and performance risks. And then lastly, I think one of the biggest challenges that we see into some physical assets are just lack of access. There may not be futures written on some products at all, or they might be pretty small and the spreads might be really wide. Some assets have ETFs or more traditional wrappers around them, but many of them don't. And so we see at Atomyze that our platform and blockchain technology as a whole can help to solve some of these challenges by creating efficiency, by creating tracking, by creating data inventory and warehousing for the assets, and creating trust, and most importantly, translating that all into digital ownership of actual physical material. And once you get to that digital form by way of tokenization, the actual marketplace you can create to exchange ownership of the physical becomes really efficient, because you're really just changing a digital token rather than having to move inventory across borders, to other vaults and warehouses and to different storage locations. So I think that's some of the challenges that we see, and one of the ways that we're looking to address them.
Interesting. And when we were discussing during the panel prep call, you used an interesting phrase where you said that the token is the actual title. Could you elaborate on what that means?
Absolutely. So it's a new concept, especially for people that are new to blockchain. But the token, which is the digital certificate of ownership, is actually mapped one-to-one with physical held in vault, or will be held in warehouse. So the token itself is not just a representative or a promise or a warrant for a pooled asset. It actually represents digital title to a very specific piece of inventory that can be redeemed. So you are the owner of the metal that's in the vault, a very, an individualized, serialized piece of, for example, palladium is our first product coming to market in February of this year. With that token, you are the actual owner. You're not a creditor of a bank. You're not a participant in a pooled vehicle. You actually own the specific metal. So it trades as a spot commodity, but again, with the efficiency of a digital format of a spot commodity.
Fascinating. And Andrew, what do you see as some of the frictions and challenges in commodity trading today?
Yeah, so thanks, Jeff. Just going back to your definition of a commodity, I hit on a few things when I actually did my own search. That physical thing is typically standardized. So something becomes commoditized when the market perceives products to be substitutable. So simply put, there are sometimes different grades, but corn is corn, gold is gold, and natural gas is natural gas, right? Up until recently, that's been fine. But now we're seeing that consumers are scrutinizing their supply chains for tax purposes or for scope 3 emissions. So they're actually demanding information on where their commodity they bought came from and how it was produced. So the challenge with this is it's practically impossible to trace exactly where every ear of corn or molecule of gas came from. But what you can do is actually create a digital asset or digital twin that captures all of the information related to the commodity's production and transportation of that physical commodity and embed that information into that asset. Simple example of this is a renewable energy certificate or a REC. There's absolutely no way to track where an electron in the grid comes from, right? But you have these digital certificates that guarantee that energy came from a renewable source. So the owner of a REC, after they retire it, allows them to claim that they purchased and consumed renewable energy. So think about expanding this beyond electricity is what we're doing at Xpansiv. So we've created a platform that leverages the smart contract language DAML to create an immutable provenance trail for the creation of these digital twins across commodities. So we launched our natural gas program late last year and already are capturing over 1% of North American natural gas production on the platform, giving the producers the ability to differentiate their product based on methane leakage, water usage, land use, completely different trading path than the physical. But an end user that buys these digital twins have the confidence in how that asset was created and are able to make the claim that they purchased responsibly sourced gas, and the benefit is the ability to reduce their scope 3 emissions. So we started with digital natural gas. We're expanding it to other fuels this year. And as I mentioned, it's extensible to other commodities. So being able to kind of uncommoditize or differentiate commodities is something that we're seeing in the market right now.
Interesting. So it's the things that are commoditized, but not quite as commoditized due to both kind of emerging consumer preferences, the emerging ability of technology to do it. And then what form does the digital twin take? Is that a kind of a token effectively on the DAML network?
Yeah, so it's essentially a token that represents a specific MMBTU from a specific facility, and all of the upstream production data and the transportation data that is captured throughout the pipeline network. So that's currently being registered on our own centralized database, but we chose DAML for its flexibility and able to operate on a number of different ledgers. So we would have the ability to move from our Postgres database over to Hyperledger Fabric or VMware or a number of other ones where DAML integrates.
Fascinating, fascinating. So maybe Omer, turn to you next. What are some of the ways from your perspective that blockchain and DLT can make commodity trading simpler?
Yeah, I think given my background, we're very much focused on the physical supply chain itself, and then particularly on the financial supply chain itself. And what we've seen, especially over the last few years, is there's been quite a bit of fraud and bankruptcies that have taken place, unfortunately, in the commodity space, right? And that's really created a kind of a run of capital from the industry. And a lot of traditional banks have either pulled back or they've completely left the space. What we're really looking to do is serve as a central registry point to be able to ingest data, for example, the tokens that Atomyze or Xpansiv might be generating, and be able to take that in to represent actual physical inventory and connect that to the actual invoice itself that a corporate is issuing to its customers. All right, and using the distributed ledger technology to be able to represent this invoice and follow that invoice throughout its life cycle, and connecting that even to its purchase order, and as the purchase order value kind of deteriorates over time. And everything that happens alongside that invoice can then become transferable information and permissioned information out to all the financial institutions that are operating in this space. So they can actually come in and see, hey, look, this transaction is verified. There are legitimate parties on both sides, right? We can see the movement of product actually take place, right? And essentially eliminate all of the paper trail that currently commodity trading is very much dependent on, right? And hopefully that will essentially bring back capital back to SMEs and also other regions in the world where a lot of it has fled from today.
Fascinating. And so the sort of the emphasis is on kind of tokenization. It's not necessarily tokenization of the underlying commodity itself, but it's the kind of transparency and tokenization of all the relevant information to bring kind of the ecosystem and supply chain into a higher level of comfort.
Exactly. Creating verified invoices where you can understand the exact KYC of every single party, making that transferable information as well, and seeing changes along the way. If there's disputes, if there are changes in prices, a bank can go in and see that, and they can see dilution on transactions and so on.
Great. And, Amanda, thank you, first of all, for your patience. How does, can you tell us a little bit about how the platform is, benefiting disclosure, and also how that may be furthering key regulatory or policy goals?
So to back up just a little bit, I think that one of the things that we all need to take into account is that quite a few people don't understand blockchain yet, right? And I know that quite a few people that we interact with in government really look at it as almost like the dark net, if you can, for lack of better words. And when in fact, really, it's all about transparency, right? And one of the things that all of us are champions of on this call is of transparency and of being transparent in activities, because that actually drives a considerable amount of value. And what the SEC has been looking for, and the White House has been looking for as recently, has been how to figure out what is going on from an ESG perspective within the various activities within large companies and banking institutions. And so what blockchain allows us to do in real time and provides provenance of is to track and trace those activities. And so this will allow people or companies to be able to put auditable activities on their 10Ks, which will then allow them to be able to deal with the risk associated with that, et cetera. And so this is something that the SEC should absolutely be championing, and all of the people that have oversight over the SEC should as well. This is the best case scenario that we've had in probably 40 years to be able to get as close as we can to the truth of what's going on within organizations.
And why was it before blockchain and introducing kind of the capabilities and technology of organizations like yours, why was this so difficult to achieve this type of transparency before?
Well, to be frank with you, quite frankly, the C-suite in a lot of these companies don't have transparency even within their own organizations to be able to track and trace those activities in real time, right? So this is something that the convergence of technologies between AI and blockchain really has put it at the forefront and made it feasible, made it completely cost effective, and reasonable to expect this of their own organizations. So, that allows them in turn to be able to report to their shareholders, et cetera, as well as the governmental entities.
That's great. And have you had the opportunity to start to kind of introduce this to some of the kind of public officials and stakeholders, and what has some of the response been as they've learned about some of these capabilities?
Well, I have a blockchain 101 PowerPoint that I walk through with people, and you'd be surprised at it is incredible when the eyes open and they realize what they can utilize this for. And actually, that I'm not the biggest fan of additional regulation, but they can, they see themselves being able to utilize this to address a whole host of other issues outside of what we're even talking about now. So that's helpful. Once they see, and we can provide business cases that they can say, oh, this is done in my, with my constituents in this area, And I get a benefit because, say, there is somebody in West Virginia who has some natural resources that they'd like to track or trace. That's probably a big benefit to let that person know what this can do, right?
Yeah, no, that's great. And other panelists, I think maybe Jeanine, you might have wanted to comment, in terms of how, some of the evolutions that you're all talking about are furthering regulatory or policy goals.
Yeah, I mean, I think in general, piggybacking on what Amanda has said, that the real benefit of blockchain technology for all of our platforms is that it just doesn't provide the collection of information that goes into a singular database. It's a distributed database that has authenticity to it. And that creates better transparency. And what we're talking about, I think collectively, is transparency through the life of a commodity from its mine or its point of origin on through a commercial product down the road. So, for example, if you're talking about cobalt or conflict mineral, or you're talking about an agricultural product that may have, a certain, standards associated with it from an environmental perspective. These are aspects that I think we are all really working on solutions that can create value to organizations that are consumers of these commodities, but also to the end consumer. Whereas today, if you're sourcing something green, there's little verification or real actual standards that can prove the source of the cobalt in your iPhone, or can prove the source of the lettuce that's on your dinner table. And with that comes value. And with that should generate customer demand for that, rather than from just a PR and marketing perspective, but from an actual purchasing perspective. And with that, I hope that there's actual market-driven forces that are demanding these products, because once you can prove they exist, there should be a better demand that can also be provided to governments, of course, that are regulating it, but just on a supply and demand perspective, from a consumer desire perspective to have these products, having that authenticity rather than just a marketing spin on something, I think is really important and can help further all of those goals.
And can I hit
Jeanine,
on
you
one
mentioned,
thing too? Sorry.
Go ahead, Amanda.
No, I just wanted to say, I think one of the other main goals that the government has been looking to fill has been market participation. Historically, the commodity markets have been, very tightly held by people who can post, $400 million lines of credit, right? And so that creates a bit of a stranglehold on the animal, right? So if we can create access for more people and democratize this, the ability of these platforms to allow more participants in, right? That solves another big key issue that Washington wants to see, allegedly.
Well, to add to that, so Biden announced his climate goals for his agenda, and there's three main areas, like electricity generation, transportation, and methane leakage from natural gas production. We know we can mandate electric vehicles, and we've got renewable portfolio standards that control the amount of renewable energy consumption in states, but there isn't really a market-based solution for methane, nor is there really a transparent way to calculate it. So what we've been doing with, and there's some competitors out there that are doing the same thing, is actually creating ways that we can track and provide the transparency to methane leakage from natural gas production. What that allows us to do is to create these assets that enable downstream participants, consumers of this gas, to make their own decision based on the ability to claim that their gas is responsibly sourced. So what we're doing with regulators is educating them. We have the tools with this technology to capture the data and make it more transparent, so to enable these market-based solutions to drive change.
That's great. So in terms of who can access these types of benefits, we've talked a bit about the benefits in terms of public policy goals. We've talked about kind of the composition of who is participating in the commodity market, sort of the let's say kind of the larger players historically, perhaps who are beginning to see open access. Do we see this as offering benefits to be reaped by large companies, by small companies? Who do we see as benefiting here? And maybe start with Jeanine.
Yeah, I mean, I think, again, Atomyze in its early days is focused on the markets for metals, both precious and industrial metals, but our aim is to extend to an entire range of commodities. And we see ourselves as being able to replicate the process for tokenization of these commodities along with the logistics of it again and again as we move into new asset classes. But the goal here is to really help small and medium-sized investors, as well as other ecosystem participants along the supply chain into a single marketplace, and to Amanda's point of opening up the access to these commodities to a wider range, which we think will help create more transparent pricing, less spread between the bid and the offer, more demand for better managed and better sourced products, rather than having a few at the very top control all of the access. And we say it a lot at Atomyze that if you have $1 billion and you make a phone call to a bank, they will help you get into whatever position you want to get into and whatever asset you want to be in. They will write you a contract or create some swap that makes it possible. But if you're a small to medium-sized investor, you don't have the back office, you may not have the logistical support, nor the relationships to enter into a position if you're looking to, say, invest in the green economy and the materials that are supporting the green economy. So we think it's really important to open up access to those type of investors.
So almost like an Uber or an Airbnb, it sort of uses in this case blockchain technology to really grow the space. So it's not a zero-sum game. It actually brings kind of more participants and more demand into the space.
That's right.
Sure. Omer, from what you've seen, with your experience in the commodities industry, are you seeing initiatives that are typically being led, by the incumbents, or things that are more broad-based with the smaller participants? Kind of what's your take, and then how is kind of some of the work you're doing affecting that?
Yeah, so what we've seen is definitely large consortiums coming together of the incumbents in both the financial space and also the commodity space that are leading the change for distributed ledger technology. The key benefits is definitely going to be to them on day one, right? They're the ones with large back offices. They've got hundreds of people back there processing transactions. And as a lot of these transactions become more automated and verifiable, it does reduce the number of back office people that need to be involved in each and every transaction. And it speeds up that process for them as well. So they can do a lot more transactions for a much cheaper cost, right? At first, I don't necessarily see a significant impact being made to the SMEs, right? What I'm seeing is most of this benefit definitely sitting with those bigger companies until a larger adoption can be gained via their supply chains. Now, the good thing is they do have the ability to kind of create that adoption because they have such large supply chains that do go down into SMEs. But what I see as a complexity that's going to take place is the interoperability, right? The SMEs that haven't necessarily been adopted or signed up to one single platform, and having multiple suppliers operating in multiple different environments is going to create a challenge for them, considering the limited resources that they have. So I think one of the next challenges is definitely going to be interoperability of all the different platforms that the incumbents are definitely leading right now. Yeah, and what we're really doing on that front is we're trying to serve as that neutral party, right? What we're trying to do is be the integration partner of being able to ingest all the information from all these different platforms that are being created that have kind of different initiatives, and serve as a communication channel between the financial institutions and corporates.
Yeah. And Amanda, have you been observing also some of these sort of incumbent-led activities, and what's your take on what their impact has been?
So I think there's a little bit of irony that's going to happen here, that you have the larger companies that have been operating in silos for quite some time, that have platforms set up that they've been dealing in for a considerable period of time. And I don't think this is a copy and paste scenario where we're not just moving things to blockchain because we want to just put things on blockchain, right? We're not going to do the same old thing to spend a lot of time moving it over. I think that one of the things that's going to come out of this new requirement from the Biden administration for reporting is that these larger companies that operate in these silos are going to be requiring their subsidiaries and the smaller entities to be reporting all of this information. And those companies aren't just going to have to report that information in a certain way to that one siloed entity. They're going to actually have to report it across the board. So they will actually, the mid and smaller size suppliers will actually end up driving the way that they collect information and report it to the larger companies, will actually drive the way that those companies intake that information, right? Because those suppliers have to deal with so many different masters. And so they're going to be the ones that targeting that particular market and making sure that they have access and they have the ability to then supply to those siloed organizations. Will make those organizations wake up and say, oh, wow, like these suppliers are, the way that they're explaining to them other people's operations work will help them develop and actually break out of those silos that they have traditionally been in.
Yeah. That's interesting, Amanda, like sort of listening to your comment about the standardization and then Omer's comment before that about kind of interoperability. They seem like, I don't know if they're kind of cousins, but seems like within an organization, it's sort of hard to get, and you made this observation earlier, it sounds like it can be hard even, within a company, let alone outside it, to get a clear picture of what's going on. And so do you think blockchain is helping to, either promote that standardization or interoperability?
Well, absolutely. I think that's the difference, right? So that's the difference between just copying and pasting what is already being done on traditional trading platforms, right? This new model and the new technology that has come into play will allow people to do something very different. The transparency and the ability to track and trace from your supply chain is going to be unparalleled.
Remarkable. One of the things, and I think Omer, you touched on it a little bit earlier from some of your previous experience, has to do with the general subject of trade finance, and that from certainly remember even like kind of going back 5 or 6 years now, and as the CFTC and people were coming into our blockchain and virtual currency working group and talking about different potential use cases for blockchain. And this is still when things were kind of pilots and, or proof of concepts or even just whiteboarding. Trade finance was certainly, one of the first, examples or poster children for, where blockchain could be used. So now, 5 or 6 years later, and, maybe start with Omer and other, panelists as well, where are we in the sort of adoption or implementation of blockchain and trade finance? Has it been rolled out? Is it still in the kind of proof of concept or testing phase? And, where would you assess that it is now?
Yeah, sure. So, I think trade finance was definitely supposed to be the poster child of blockchain and commodities. And it hasn't quite panned out that way, right? I mean, to be honest, there's a lot more complexities in it than you think, right? Every little bit of a commodity supply chain feeds into the trade finance environment, and trade finance at the end of the day is one element of the commodity cycle, right? What you're realizing, while there's a lot of companies that have done fantastic jobs at creating unique solutions that are just now starting to take off, it's taken longer than they expected, and then I think one of the primary cases is definitely a digitization of letters of credit. That's something that would take 2 to 3 days sometimes to get issued. And right now, there are companies out there that have reduced that into a matter of hours, right? And I think that's a huge use case of distributed ledger technology. But on the other hand, there's still a lot of other aspects of trade finance that haven't quite been addressed yet. And a lot of that is because the rest of that supply chain hasn't been digitized, right? So if you're still representing information that is sitting in a corporate ERP that, at the end of the day hasn't been independently verified or verified by the opposing party or has any traceability to it, you're still just relying on data that a person sitting at a desk went through and typed and is, at the end of the day, subject to errors or misrepresentation in some form, right? So, even if you can execute a particular part of the transaction, the real traceability has to start at the beginning, right? And that's kind of things that LiquidX is really focusing on, in being able to go all the way to the origin of a transaction and be able to start tracing it from there.
Other perspectives on trade finance and kind of how affect kind of adoption or barriers to adoption from the other panelists? Great. So go ahead, Sam.
Yeah, sorry, I did have just one additional comment if nobody else had on that. But yeah, I think one of the complications of adoption is very much, what some of the other panelists have talked about here, is international law, right? I mean, digital contracts are not something that has necessarily been tested in international law yet, and it's very much new to the space. So in international trade and trade finance, most of this is cross-border business, right? So being able to have someone sitting in Ghana accept a letter of credit or issue a letter of credit and be comfortable that that's going to be something that applies under their laws and the interpretation of the courts in that particular country, that's something that's going to take a long time for people to gain comfort around.
Got it. Makes sense. So kind of a question about kind of the rollout and implementation of, kind of blockchain or tokenization to, some of the underlying assets. This is probably more kind of a question for Jeanine or Andrew, where, when you need to attach this, kind of the token that, either the tokenized title in the case of kind of the Atomyze model or the digital twin in the case of the Xpansiv model, can that be, easily sort of retrofitted to kind of existing assets, or is this something where at least you need to start with sort of new mints or newly discovered or newly established? How does the rollout and implementation process work?
So one of the benefits of blockchain, of course, is that it's not just the serial number of the bar that's sitting in the vaults or the warehouse or the drum number. It can actually include other data in the smart contract that identifies it and identifies the term everyone loves these days is metadata, right? That exists. It could be point of origin, labor standards, other certificates that are created. And it can be passed along with that identifiable token over time. The key to any database, whether it's blockchain, distributed ledger technology, or traditional databases, is the quality of the data. So it doesn't really get around sort of the idea that whoever's providing the certificate information has to have good data. And it also has to generally be from point of origin. So if you're looking at tokenizing gold, which we will be tokenizing, if that gold is already fabricated and in bars sitting at Brinks, if it doesn't have point of origin attached to it already, there's nothing that can really be done to provide that assurance going forward. But for newly minted products that are coming out of the ground, products that are going through their cycle of refinement and fabrication, that's really where this stuff becomes really interesting. And I think collectively, everyone's working on their aspects of the supply chain to provide that authenticity, that tracking. And I think what Omer said earlier is really important. It's the interoperability of these standards. So there's no single company that's going to solve all of this by themselves. At Atomyze, we're focused on investment products and fabricated materials, as well as supply chain solutions for managing forward deliveries of materials. But there's other participants on this panel and not on this panel that are working on providing that data that we'd love to get to a point that we can be incorporating all of that data into the supply chain contracts. And so there's full information up to Amanda's points, the regulators and auditors and even end consumers and even retail customers that might be able to scan a barcode and identify where their material is coming from. And so I think that's where we want to. This is still really early in the grand scheme of where this is developing, but there is real meaningful progress being done on a lot of this. But again, it starts with good data, as everything does, and then being able to track, trace, input, carry, and store that data over the life of a product.
I'll just add, Jeanine hit it on the head. The quality of the metadata is so important. Look, this data, emissions data in Xpansiv case, it is being captured, right? But would you really buy a digital asset that is based off of self-reported data? No, you're going to want to know that data was monitored, verified, audited, and what this technology allows us to do is have that audit trail that other people certified that data is accurate, right? So I think back to Jeff, one of your earlier comments are inertia going against these trends. It's going to be the incumbents that have the bad data, right? They're not going to want this transparent technology to reveal their their poor operations. So I think it's all about, the market, consumer is sending a signal to the commodity markets that they want greater transparency, and you'll see that change.
Yeah. Yeah. So, I'm really struck by it's a combination of sort of evolving technological capability, sort of evolving consumer preferences, as well as reflected through political leaders. So kind of a form of social construction as well. And then perhaps, having, some movers as opposed to all movers. So we don't necessarily have collective action, but, kind of the potential for best practices, and then best practices, and consumer preferences eventually driving potentially broader adoption here. So very interesting dynamic.
I think what we're going to see is a combination of two things. I think we're going to see one thing where we've got, on this panel, we've got people who are very experienced in the commodities market, and you'll see that larger companies will start reporting that on their 10Ks. They will have very accurate information about a portion of their supply chain, and this will be one of those pieces, right? There will be portions of their supply chain that they don't have such accurate information, and they will grow towards that. They will be able to say on there, this is where we're working towards, and these are the people we're going to work towards that with, right? So that will be a part of the reporting structure. But I think we're going to chip away at it within the different groups until pretty much the whole pie is full, and corporates do have access to this very accurate and transparent information.
Great. Well, with that, I'd like to thank the panel. Very lively discussion. Be very interesting to see where we are kind of at next year's, hopefully in person or else again virtual Davos. Hopefully, we'll continue to see these trends. Again, I'd like to thank the panelists, thank GBBC for having all of us, and with that, turn it back over to our hosts.
Thank you, Jeff.